Okay, we're going to try and record this to the final target here. This is Bitcoin, dollar, this is BTC, USD, this is the 1 hour time frame. Now I know I'm a little bit late with the beginning of this signal candle, but I want to review a few things. First of all, I want to talk about the continuation breakout trade. Most of the continuation breakout trades that we've executed have been to the upside. Obviously this big trending move, but just the same, we can trade reversals. Again, obviously, we're not anticipating a huge major reversal just yet. It could happen later on. But initially, when we get that first continuation breakout trade in the opposite direction of a major trend, we want to take specific targets. We're not saying in any way that the trend is immediately over with and everything is going to collapse and it's going to reverse and go in the opposite direction. It could be a short-term, temporary trending move to the downside. Again, this is the 1 hour time frame. So if we were to go to the daily chart, it could just be, maybe a pullback to one of these Fibonacci retracement levels. This is the daily time frame. I'm going to go back to the 1 hour. Here we are in the 1 hour, and here's our signal candle. Now, one of the things that I want to specifically talk about here with this trade isn't so much what's going on here. It's, after the fact, it's how the trade's set up. So we had a continuation signal candle below that support level, and I want you to notice how many hours that was. So when I explain the continuation breakout trade, there's a signal candle and then there's an entry. They're not the same. So the signal candle is not the entry. It's not like the HL30. On the HL30, the signal candle is the entry when that candle closes. In this instance, there's a 3-pip entry or 3-point entry. So you'll notice that on that signal candle, here was our high up here and our low. This was the range of consolidation, and it took a while. I didn't trade anything in here with Bitcoin. And then it came down and closed below that support level. Once it closed below that support level, that's my signal candle. And then I need to confirm that with all 3 indicators, I'm getting solid confirmation here. First of all, I go straight to the Bollinger Bands for confirmation, and then I go to the CCI and the MACD histogram. So we had 100% confirmation on all 3 indicators. But you'll notice on the next candle and the next several candles after that I did not get that 3-point entry. I have to wait for a while. So there was that pullback. Sometimes these pullbacks will go back up to the level that it broke out of. And then sometimes, just like this, it'll go a little bit higher. It's just the way it works. You can draw fibs and use your Fibonacci tool from that high to that low. And just to get a better sense of how far back it's going, but you'll also notice that there was sort of a tweezer bottom here with these 2 1 hour candles right here, also providing a temporary resistance level right here where it reversed. Now, I don't get in up here because I was asked the question, if we already have the signal candle, why don't I get in back up here? Wouldn't that provide me with a better entry? And it would, but my confirmation that price is going to continue in the direction of the breakout is when I get the 3-point entry. If I don't see the 3-point entry, then price could come back up inside of this range of consolidation and then reverse and go the opposite direction. And this 3-point entry, following this rule, using this technique, this entry rule, that keeps me away from getting into these possible head fakes where price prints a candle like this and then turns around and goes right back up again. These head fakes are serious possibilities. And without using that 3-point entry, it's very likely that I could get into a failed trade. So again, I use that 3-point entry to confirm that price is going to continue in the direction of the trending, the breakout move. When it hits our first target, if we're there, we're actively managing the trade, as I say very often, then, we'll try to scale it and lock in profits. Don't let it go back up again. Scale it and trail the trade closely with a very close stop at that point, or lock in all profits. At this point, at the first target, if you want to do that. Otherwise, again, if you're there and you're actively managing the trade, we're going to try and take it down here to the 16,000 level. So we'll follow up with this in just a few minutes. There are times when I would cancel the possibility of trading this as a continuation breakout trade if it behaved this way. So if price, after printing this continuation signal candle on the pullback, if price went all the way back up and took out the price swing high that created this move, the breakout, then I would cancel the trade and I would not consider getting in short, even if it gave me the 3-pip entry. If price went all the way back up here above 18,900 and then turned around and came all the way back down and then gave me that 3-point entry, I would not enter short. That to me would just be another new range of consolidation. It would be very risky. But as long as price pulls up to a healthy Fibonacci retracement level or an old support, possible new resistance area, just like it did right here, that's healthy. That's good. That's clean. That's exactly what I'm looking for. So we'll follow up with this in just a few minutes when it reaches those targets there. Okay, we're just about to hit the first take profit target here. You can see just how many hours from the time I paused it when we had that live candle moving down towards that target. 1 hour charts. So we had 1, 2, and now we're on the 3rd hour after that stronger move. And it is currently just about 7:30 p.m. New York time, December 19th. So again, you can see just how many hours some of these continuation breakout trades will take. Just like in the last 40 minutes or so during this pullback here, I received a few more questions again that do I still think that this trade to the downside is going to work out? And is it, should we lock in profits at this point on the next time it moves back down? Do you think it's going to hit the targets? So this is my answer in a situation like that. The first thing that you got to remember is that when you're using a trading system, it doesn't matter if it's mine, yours, you put it together, or somebody else's. If you believe and you have proven to yourself that it works, then from that point on, you have to execute the trade the way you're supposed to. The proper entry, using the right stop loss, using the right take profit targets. If you change any of those parameters, if you change anything there, you're going to get different results. And we'll go back over here to this where it looked like it was going to return and maybe go all the way back up. One of the questions that I received, and I have another strategy called the T2 pattern. And what it is basically a larger, it's sort of like a W bottom with the right side of that W printing, an extreme low, sharp like this, and there's a lot of divergence. And when I'm looking for the T2 pattern, I want to see divergence in the CCI just like this. This is good to me. However, this wasn't a T2 that developed at a specific support location all by itself, meaning that prior to looking at or looking for a T2 pattern like this, where I would expect price to come back up and take out these highs, I have to go back when I see a signal, or it doesn't matter whether it's a T2 or a Tech 1 trade or a continuation breakout trade. When I see a signal, I have to go and take a look at what's going on here to see if there were prior trades based on my system and prior signals. And there was that continuation breakout trade. And since I know where my targets are, if it hasn't hit its take profit target, then I can't really consider this as a valid T2 trade and trade it back the opposite direction, because I would be fighting what I already know is going to work out in this type of condition, a continuation breakout trade. So that's really where it all goes back. So whenever we take a trade, even when I trade the continuation breakout trade, when I find that, I always ask myself, and I go back, were there any prior continuation breakout trades? Were there any prior signals? What was going on here? Was there maybe a reversal up here that sort of led into a consolidation range, and then a continuation breakout trade developed and continued in the direction of the reversal pattern that was up here at resistance? That's also something that happens pretty on a regular basis. Very often when I get continuation breakout trades like this, I can go back and I can find a reversal candle pattern, sometimes on the 4-hour chart, sometimes on the daily, and it pushes all of this, and sort of that's the indicator, that's the signal, that's the confirmation that I see, and then I just wait for the actual entry. If I want to, of course, minimize my stop and take profits appropriately on a day trading basis, meaning trying to get into the trade and trying to get out of the trade in the same trading session or the same day, it doesn't always work that way. Sometimes I have to hold, longer than 24 hours or about 24 hours. It just depends on the market, the conditions, what's going on. But what I'm getting at is I can't start trading these little patterns here that I see without paying attention to what's going on the bigger picture of everything. When I see consolidation and I see these bigger pullbacks and I'm looking for continuation breakout trades like that, I have to let them move to their targets or not trade anything until it's satisfied that take profit level. So when we had these two green candles, these two bullish candles that looked like it started to look like a T2 pattern. This would have worked just fine if it would not have printed the continuation breakout trade. If this all would have occurred inside of this range and then it dipped down and then turned around and went right back up, that would have been my T2 pattern. That would have been a more valid signal. And again, it was the divergence. Excuse me, I'm just looking at another chart here. So this is about to trigger the first take profit level. So if I was to be looking at this T2 pattern and the divergence and all of this occurred back up here, and that candle would have closed below that support with this type of divergence, then I would have considered maybe a T2 pattern. It could have been an overall larger W bottom here. That's a possibility, but it didn't happen. We had a confirmed continuation signal candle with all three indicators confirming. I just needed to wait for the entry. So again, when I see retracements, so as all of this is unfolding, I know how unnerving it can be. You're sitting there thinking, oh, I should have taken profits. Maybe it's not going to hit that target. I should have taken profits. Now I'm back to break even or slightly negative. I gave up 80 points and it pulls back like this. Well, in this instance, with this particular pair, this is Bitcoin dollar, we know that these retracements can be pretty significant. We've covered a huge distance. We're not talking about a trading range from the 3,000 level to the 5,000 level. We're talking about, prices just under 20,000. So it's covering these huge differences or distances, and these retracements can be over 100 or 200 points. So that's what I'm getting at, is that we have to anticipate these pullbacks like this that are going to look this way, but at the same time be aware of what's going on technically. So when I talked about price pulling back after it printed the signal but did not give the entry, and it went back up here where my cursor is, again, people are going to be thinking, well, is this going to be a reversal? Is this a head fake and it's not going to work? Or should we get in up here? But we want to be aware of what's going on technically. Price just went back up to that old support level, that tweezer bottom low here, that range of support, which was then acting as new temporary resistance here. It could have easily stopped here at this support level, right around that range, and it did for a little while. And then it spiked and went right back up one more time. The same thing happened here after the strong move when we got our entry, and when I was making that recording earlier and I paused it, it pulled back and tested this range right here, this support range right here, and then curled right around, see if I can bring that in here, into this live candle. That's all that it's doing. And I know, again, in the heat of the moment, when you're looking at it like this, you're thinking, okay, well, maybe this isn't going to work. This trade isn't going to work. There, it's hitting our first target here. I don't know if you can hear that recording, the alerts going off. So you're thinking it's not going to work, but we have to leave it alone. We have to let it do its thing. We've already accepted that we did everything that we possibly could correctly to identify the signal and make sure that it's confirmed, and then make sure it is what we're looking at, what we're looking for, a continuation signal candle. It is what it is. It is what we think it is. It's confirmed. We know it. Now we just need to wait for the entry. Then we got the entry. Again, along with these pullbacks do not necessarily mean that the trade is over, and this is a perfect example of that. Now we're going to continue to hold for this target here at 1,600 level for an extra 50 or 500 points there, I think. Yeah, this thing's probably going to move pretty quick. We're looking at 7:35 p.m. now, New York time. There's quite a bit of activity going on in here and a lot of volume, so we should be okay here. With a trade that covers a distance like this, it is not a bad idea to take profits a few points before the actual target. There's nothing wrong with it. If it comes down here to 16,000, 11, 16,000, 17 or 117, I'm taking it. There's no way I'm going to sit here and give all of this back. These numbers are psychological levels, these take profit levels. I can't get that marker, that price marker right here that reads 15,987. I can't get that to sit right on the 16,000. There it goes. I wasn't able to get it to do that earlier. So these are psychological levels. These are targets. I very often with this pair, with the Bitcoin dollar, I will target psychological levels. because this one can stop and turn around and go right back up the opposite direction, and then we're stuck holding. But we've got a perfectly good trade with an entry of 17,490 all the way down here to 16,000. Why give all of that back? So we're sitting here at 116, 130, 16, 100. So we're getting really, really, really close to taking some profits here at this point. And I am actually going to prepare on another computer here to lock this one in on the next push towards that 16,000. Now, it could continue lower. Again, as I always say, you know, if you can scale out of a trade and you're there, you can trail it closely. Get as much as you can. It's probably going to push through the 16. But there is a serious support relative to this time frame, the 1 hour chart, sitting right around that 16,000 level. It's a pocket of support. It's not going to always be a precise number. Here we are at 16,040, 36. And I am taking profits here as it's popping right through 16,000. I hope I didn't miss anything, though. That really does describe how you can use this breakout method on Bitcoin dollar using the 1 hour time frame. I don't use the continuation breakout trade on any time frame smaller than a 1 hour chart. To be totally honest, when I first developed this method, I was actually looking for breakouts like this signal candle here that put us in this original trade here. I was looking for breakouts on the 30-minute chart. I was using a 30-minute chart when I first put this method together. And what was happening is these candles that would close on the half hour, the ones that close like at 10:30, 11:30, 12:30, 1:30, those candles would print a signal candle like this and then move down just a little bit lower and then turn around and close right back up again on the end of the next candle. And I was still getting into head fakes. I was still getting caught in a lot of these head fakes because I was using a 30-minute chart. And when I switched over to a 1 hour chart, it eliminated all of that. It eliminated all of those spikes. And I'll tell you why that happens in some cases. So when we get economic data at 8:30 New York time, very often, this doesn't happen every single situation, right? Obviously, you know this. Things are always going to be a little bit different. But this is what happens very often with that scenario that I just described using a 30-minute chart. The candle from 8 to 8:30 very often will close below a support level, creating, again, that head fake. It's a false move. The market's anticipating something, and then the news comes out at 8:30, and that next candle will turn around and go right back up and close at 9 o'clock back inside of consolidation. So if you're looking at a 30-minute chart, it looks like a continuation signal candle. If you're looking at a 1 hour chart, there is just a spike, a wick that goes through support, but no candles close below that B low. And again, that's one of the conditions that can create what I just described, which is using the continuation breakout trader on a 30-minute chart doesn't always work. You can eliminate a lot of the head fakes by simply switching to a 1 hour chart and not using this technique on anything less than a 1 hour time frame. But it works. It works. It's an awesome technique to use. The continuation breakout trade is. It's an awesome technique to use on a 4 hour chart and a daily chart. I use them all the time. I mean, I don't know how many times we've gone back over here with Bitcoin and we've identified these daily candles that broke out, as well as the 1 hour time frames that we were actually using to get into the trade. So we were pinpointing our entries on the 1 hour time frame, but watching the 4 hour and the daily charts to confirm these, you know, bigger trending moves that just continue to go and go and go. So again, we're done with this trade. That's how it works. Don't use this technique on anything smaller than 1 hour time frame. Always watch the 4 hour chart along the way. Look for key support and resistance levels, and do the same thing with the daily time frame. This is a daily time frame here too. I just showed you the 4 hour just a moment ago, but this is the daily time frame. So we're going to be watching this one. I mean, you know, we don't know if this is going to print and turn around and go right back up again and take out the 20 and keep going. Nobody ever really knows for sure. Either way, we're going to make money going long or going short when the opportunity presents it.